Good morning, everyone. Thank you very much for joining us for breakfast. It looks like folks are far enough along. I'll go ahead and kick things off. Please, obviously, continue eating. Make sure that everyone's in good shape on a Monday morning. But I'll go ahead and get this started. So, thank you very much for coming and joining us, for being here first thing on a Monday. For those of you that I haven't met, my name is Matt Scarborough. I'm CEO of Bridgeforce. You'll be mostly hearing from some of my colleagues this morning, but I thought I'd take just a few minutes to kick things off and introduce the session. Before I start to dive into the agenda, though, and introducing the session, let's see, I'll also let you know that there's a bunch of my Bridgeforce colleagues around the room. If I could ask my Bridgeforce colleagues to just stand up for just a moment so folks kind of know who you are. I won't introduce each person, but we're a huge fan of CBA. I unabashedly will say I think it's the best conference in the country each year, so we really make the investment of bringing a lot of folks. Hopefully you'll get a chance to chat with some of my colleagues at your tables. I'd also love to get a sense of the folks in the room, so we help to tailor the conversation to the folks here. If I could get a show of hands of how many folks in the room are from a lender of some sort, whether a bank or non-bank lender. Okay, looks like the vast majority of folks in the room. How many folks here from a regulatory body? Okay, great. Thank you for joining us. How many folks from various sorts of credit reporting agencies of some sort? We have a few folks from that industry. Great. Any other sorts of vendors in the room, various parts of the industry? Okay. All right, great. Well, thanks. So I think we've got a good mix of folks in the crowd, overwhelming majority of folks from various lending institutions, and a mix of the rest of our ecosystem as well. One other just kind of logistical announcement before we get rolling. So there's bowls on the table for everyone to put business cards into if you like. There'll be a few functions for those business cards. One will be that we'll have a drawing at the end for a couple things, for I believe an iPad mini and a Kindle Fire. And also, we'll follow up with the presentation that we give today. We can email that out to you if you have the interest. So if you drop a business card in, we'll be sure to send you a soft copy of this and other related things as we continue to move forward. We're working on some case studies and other materials that we think would be as informative as we know how to share. So please drop those in, and our colleagues will gather those and we'll pull it together for the drawing at the end. All right. So I'll take just the first couple bullets there of the session overview and a bit of the rest of these introductions. I'll then hand off to colleagues as we go through the regulatory update, the sort of more enterprise view as to how do we go about all of this, and then going into some of our data quality tools that we have created and continue to create, and then hopefully Q&A that we can potentially take some of various points we may pause throughout, but then certainly hopefully a healthy discussion at the end. So, brief introduction on the topics, right? I mean, I'm sure for everyone in this room, you've spent a lot of time thinking about various sorts of credit bureau related issues over the last few years. I will say that among our work here in the US over the last few years, the credit bureau related topics is one of the most, if not the single most common challenge that we see our clients pulling us in to help with. We're dealing with all sorts of things, but this is one that I was talking about at the table this morning a little bit. 5 years ago, there was lots of focus on credit bureau data from a standpoint of strategy design, but not necessarily all of these other aspects that everyone's working through today. So we'll try to take through the issues as we see them, approaches to it, and then ultimately some of the tools to work with. I'll take just a moment to introduce Bridgeforce. I think there's many of you in the room I already have the pleasure to know, but I'll take just a minute or two to give background on the company for those who don't already know us. We are a very unusual consulting firm. We are a juxtaposition of, on the one hand, very, very tightly focused, and on the other, a bit broad. And in that sense that very tightly focused that everything we do is focused on consumer and small business banking. But within that world, we're pretty broad. We'll deal with everything from product design to your marketing and prospecting, underwriting rules, on through then the underwriting process and getting things onboarded and on the books, through servicing, collections, recoveries and debt sale, et cetera. And within those, all of the aspects from the people side, the business process, the technology, the compliance and credit risk infrastructures that weave all of it together. And also in terms of our people, we're staffed much differently than most consulting firms. So I think the number on the page says over 75%. The reality is even higher, that the vast majority of our people join Bridgeforce after 10, 20, 30 years in the industry before joining us. So it's a different approach, and that we come with folks that have been inside of lending institutions for much of their career and then come and join us as part of some of the problem solving that we like to do with our clients. And the last bit on that, when it mentions being execution focused, one of the things we've learned that honestly has driven a lot of our growth over the last several years is I think we are as a company, I think we're good in a lot of areas. I think our area though of greatest comparative strength becomes when you have to lower the execution risk and you're trying to get things done that involve multiple silos, right? I think we can do a good job inside of one silo, but when you start to have to bridge, as so many of these things do, that have to get different areas of institutions working together to solve the challenges, really kind of plays to our strengths. I'll also introduce Bridgeforce Law. So it's a new entity formed here within the last year that the Bridgeforce helped to incubate. You'll hear next from the managing partner of Bridgeforce Law, who's also our general counsel, and had joined us. And as we're dealing with some of the challenges, and for years, Bridgeforce has been involved in lots of these things where we would step up to that line and say, but we're not the attorneys, right? And so, but there's such an intersection of that we thought there's a real value to having a firm that is just as tightly focused on consumer and small business banking as we are, but bring some of the related legal aspects to be able to work in a hand and glove together. And we'll work very collaboratively on various client projects. So when we think about how we pull some of that together, and I'm obviously not going to go through each sorts of bullet points up here, but there's so much where we see the intersection of what does the legal interpretation and policies need to be, how do we try to shape that along with the, obviously the pieces of now how do we turn that into reality, and what needs to be our strategies and roadmaps and execution plans along those lines. So with that, again, I'll keep my introduction pretty brief. I'm going to go ahead and bring up Kurt to take us through some of the regulatory update.
Thanks, Matt. Hopefully by this point everyone's had enough coffee such that the lawyer talking about regulations is not going to put you to sleep. I want to kick my section off with a couple of quotes, just emphasizes the relevance, the timeliness of credit bureau management. Director of CFPB just last month stated, CFPB is focused on improving the accessibility of credit reports and improving their accuracy. Moreover, he went on to say that we want to see how disputes get resolved as part of our work to ensure that millions of consumers are not being wrongly denied access to credit or charged more than they should be for taking out a loan. And it's not just the CFPB. Obviously, a couple of months ago, the FTC issued a statement where they said the final FTC study recommends that CRAs review and improve the process they use to notify consumers about the results of dispute investigations, and that CRAs continue to explore efforts to educate consumers regarding their rights to review their credit reports and dispute inaccurate information. Obviously, at the heart of the regulatory ecosystem is the FCRA. Given the level of sophistication of this audience, I'm not going to go into a lot of detail about FCRA, other than to highlight that in January, the CFPB came out with a list of CRAs, and so the number increased to almost 50. And I think that's relevant because before, where you traditionally looked at the financial services industry, we're now looking at background screening, tenant screening, medical, so that the definition of CRA has vastly increased. I think the important takeaway from this, though, is not necessarily whether that number's 3 or 47, but it's just that, and we're hearing this from a lot of our non-CRA clients, that the questions being asked, the controls being sought are tantamount to those that are required of a CRA. Also, just as the definition recently was expanded to include just about 50, I think that it's important to evaluate when that next definitional change may occur, such that your companies may fall into the definition. So again, FCRA is kind of the heart of the regulatory ecosystem, but there are a lot of other regulations, consent orders, agency enforcement actions, bulletins that apply. I'm not going to go through each one of these, but other than to say we do advise our clients to have a regulatory applicability library to ensure that you have a robust controls and policies and procedures in place. So, question is, how does this affect my business? First, the furnishers of data to the CRAs are required to maintain a dispute management system and to follow up on these disputes. The CFPB is specifically required that the policies and procedures should require, one, an examine randomly selected sample of accounts for furnishing inaccuracies monthly, two, that you monitor and evaluate disputes the company receives from the CRAs and its customers, and three, the immediate cessation of furnishing information for any account that's being disputed. In addition, there must be policies and procedures to address adverse actions, and lastly, policies and procedures to address privacy. And on the last bullet point, I don't know if anyone saw the headlines this morning of the Equifax credit reports, 300 credit reports that were sent out to somebody who had requested their own. So that's very timely, and certainly there needs to be the controls in place. So obviously we're familiar with the statutory damages associated with non-compliance of FCRA. I won't go through these, but I want to also highlight the civil liability. The number of complaints are limitless, and as we all know, just the cost of defending against a lawsuit can be pretty costly. Obviously, FCRA has made the headlines numerous times. I won't go through each of these other than to say, obviously, some very material fines have been levied, and also just the negative press associated with having your name posted on a headline. I want to take a moment just to review the recent credit bureau activities. One, in December of 2014, the CFPB has stated that they're going to require the CRAs to provide reports to the CFPB listing those agencies, those furnishers that have the most disputes. Two, the big three, with respect to medical debt, the big three have agreed to wait a 180-day cooling off period whenever any medical debt related dispute arises in attempts of trying to resolve that. And also they're going to have specifically trained employees that are going to work to remediate any medical related dispute. And lastly, background checks. Any potential employee has to be given a disclosure and consent to any credit-related investigation with respect to screening for backgrounds. So that pretty much describes the past and the present. As far as the future, I think we highlighted the relevance and the timeliness of credit bureau management, and I think it's absolutely imperative that agencies have the appropriate policies and procedures and controls in place. With that, I'll hand it off to Brian Reese, who will talk about compliance.
Good morning, everyone. Let's try that one more time. Good morning, everyone. All right. I know I always have Kurt go on before me, but I like to create a little bit more energy, a little bit more excitement. So hopefully Kurt didn't scare anyone off, and we'll start to get into. Okay, we know the rules, we know the regs. How do we figure this out? I promise this is our last quote of the day, last one, promise. But it's really important. Director Cordroy shared this quote recently, but because of the importance that credit reports have in consumers' lives, we all need this industry to operate the highest levels of quality and performance. That last part, highest levels of quality and performance, we need to take that back in and really understand what does that mean. And we will talk a little bit more about data quality. Our data quality expert, Andrew Edelson, will be taking us through those pieces, but we all need to keep that in mind. What does highest level of quality and performance mean? So we talk about expectations. Expectations have increased when we talk about credit bureau management and compliance. Some of the expectations are not unreasonable. We talk about what are the expectations. Ensure that you're reporting in Metro 2 compliant manner across your organization. Make sure you report the loans accurately at least once per month. And perform some validation of the data along the way to make sure it's accurate and there's integrity to it. And then what you want to be reported out of your system is actually getting to the credit bureau. So not unreasonable expectations, but the execution is the other side of the coin. So let's look at disputes expectations. I think we hear a lot about this, but making sure that you're using the right compliance codes. Those are really, really critical. The responses and letters to consumers, address their true concerns. So are you addressing the true concerns? Do they understand it? Do they understand what you're trying to convey? And that the appropriate resolution of all disputes are completed within a timely manner. Less than 30 days. You're hitting that timeline. And lastly, in disputes, that you're making sure that you're resolving the root cause of the issue. So where you might be resolving just a customer specific request, if that issue could impact others, that you're taking that next step to show we identified it hitting this customer, we determined that it's not a larger systemic issue that we have to address to ensure that we don't harm or violate regs. Last piece on usage. Usage is one of those I call sort of forgotten areas. Reporting disputes gets kind of all the credit, but usage is one of those simple areas that it's easy to control, but it's the broadest in terms of scope. It goes across all products, all areas. We have a usage matrix that we use, and it just takes up a whole wall whenever we do it with clients. It's vast. All this is requiring is make sure you have right permissible purpose. You're using the right inquiry type. Whether when you're pulling a bureau, are you leaving a soft or a hard inquiry on that? And that the people who are supposed to be accessing it, who have the authority to, are accessing it. And how do you protect against unauthorized access? And this starts to cut into some of the fraud issues and things that are popping up with privacy. So there are a lot of integrated views of this. And lastly, the other expectation is real around enterprise level policies, procedures, and controls. They should be in place across all the business lines. That's the expectations. So this is where I get some energy in a room. This looks complex. This is what we call a control framework. But at the simplest view, who in this room has a compliance management system? If you have a compliance management system, stand up. Whoever has a compliance management system, stand up. Stand up. I was expecting more to stand up. No, stay standing. Sorry, stay standing. Stay standing. Stay standing. Bridgeforce, you should be standing up too. We have a compliance management system. Who does not know what a compliance management system is? Maybe that's a better question. Okay, good. Stay standing. Well, the good news is, I know you want to sit down, but there's a point to this. The good news is that we've invested a lot of time and a lot of money in building out compliance management systems that work for our organization. And the good news is that we have a lot of this in place, and we just need to create some more specialized needs for credit bureau management compliance. But we should be defining and using the existing infrastructure we have today. We don't need to be building a new way. We need to figure out how to fit it in there. So here's why everyone's standing. What I want to understand is, out of the folks that are standing, who has a dedicated enterprise compliance, credit bureau compliance team? If you do, stay standing. Stay standing. Okay. The people that are standing, you can put an extra business card into the bowl, because you'll actually have more time to use the iPad Mini and Kindle Fires. The rest of us, we got a lot to do. We got a lot to work on and a lot to build out. Because of the heart and soul, you can sit down. But definitely put your cards in. Thank you for all participating. Don't worry, we have more bonus questions. Don't worry. The heart and soul of credit bureau management compliance is a single point of contact inside your organization at an enterprise level to field and manage all credit bureau related activities. Until you define that, until you have resources that are committed to that function, you're not going to make the progress you need to make, and it won't be sustainable. Sustainability is what's important here, is to not just wait until there's a problem and then you scurry together a team to fix the problem, but to have a group that's dedicated. The nice thing about once you get a group like this together is that there are a lot of controls as well as savings that can happen when you're not trying to scramble and kind of always try to fix problems. But you also can save money on a lot of your relationships. If you have one group that's managing all your credit reporting agencies and vendors, they can do bulk discounts, they can do a lot more for the organization, so they can actually fund themselves. I know everyone's looking at this as a real big expense, and it will be from a salary standpoint, but they can actually fund themselves by reducing your risk, reputation risk, as well as reducing the actual vendor costs for what you're using reporting agencies for. To give you a sense, this type of team, it's not 5 people. I know a lot of you thought maybe 5 people or so. It's more like, depending on your organization size and the level of automation you have, it can be anywhere from 15 to 30 dedicated. I know there's a lot of eye-opening there, but this is a really critical function, and I'll show you guys why. This kind of shows where that team might fit in your 3 lines of defense model. And if you see the boxed out area, we feel it's necessary for critical functions like this that have especially higher risk of either regulatory focus or customer harm, that you use a 3-tier first line of defense, meaning you have QA, QC, but then in the middle you have this specialized team that's really just micro-focused on this piece of it. And we view that the first line is where you need to catch it, not the second or third. You really need to bolster your first lines in most areas that have high risk of customer harm or regulatory risk. So let's go back to control frameworks. There's 4 areas: risk assessment, prevention, detection, correction. This is typically part of your common compliance management system. Starting with risk assessment. First bonus question: what is requirements inventory? Anyone know? Kurt started to mention requirements. Anyone? Requirements inventory. Okay. I'll go into it. Requirements inventory is your list of regs at an element level, your policies and procedures. What are you supposed to be complying from a regulatory perspective? What are you supposed to be complying from a policy perspective? What are you supposed to be complying from a procedure perspective? That is your main tool to conduct a risk assessment. So these are typically either self-assessments or they can be externally derived, and we do a lot of those for our clients when we go into this area. The first thing you also have to define is what are your active credit reporting agencies? So Kurt talked about 50 of them, approximately 50 now that are considered credit reporting agencies. You need to understand how many of those 50s that you're furnishing data to and who you're using as a credit reporting agency. And a lot of organizations are looking at that list and making some decisions to consolidate or determine should they be furnishing to all these organizations because of the control needs. You're going to have to invest a lot from a control perspective to control the information flowing in and flowing out. And a lot of that has to do with some of these fraud data breaches that are going on. All this information is going out, this critical sensitive information is going out, but do you know how they're controlling for it? You know how you're controlling for your information, but do you know how the receiving party is controlling it, and if they're giving it to a fourth party potentially? So there's a lot of risk with sending out information across the businesses. This is meant to be an eye chart. What we wanted to show here is this is our requirements inventory, the categories that we use so far across reporting disputes and usage. So there's a lot of areas that we go into, over 150 criteria elements that we do, and it's increasing over time when we do a risk assessment. But this is our requirements inventory, and it's something that we would recommend that everyone start there. Start with your requirements inventory, conduct a risk assessment, and move through. So we talk about prevention. Prevention's interesting, very interesting topic in this area, because most of the work that we see in credit bureau management compliance is about detection. And where we need to head is in prevention, whereas we should be looking at metrics such as customer identified versus self-identified issues. And in prevention, the goal is to really automate preventative controls, so there is zero to no chance of potential reg violations or customer harm. In detection, we actually would have tools that would say, okay, well, something happened, but at least we have the reporting on that, so we can go in and we can fix it. But preventative is all about how do you stop issues from ever happening in the first place. A couple of the ways to do this we're seeing out there, and Andrew will talk more about the data quality tools, is really limiting the number of files that are going across to each bureau. For example, you might have 6 different business lines that are sending a credit bureau file to Equifax or Experian. Consolidating that down to one file, to one organization, and putting data quality tools in one area could prevent discrepancies or inconsistencies or issues by having so many files going out from so many different sources. So that's kind of one preventative type of view. The other preventative basics is really having your documentation, policies and procedures. Another key element is training and culture. So I'll talk about training first. Do you have formal training programs for people involved in credit bureau, whether it's for disputes or it's for usage or reporting? And the people that are supposed to be controlling it, providing that credible challenge, are they trained in this? We have found that this is a very technical area. Metro 2 compliance, all the rules and details is very, very technical. I can tell you that for me, it's not something that I know all the nits and gnats of Metro 2 compliance. I know at a higher level, but your people to control for it and provide credible challenge, you need to know the bits and the bytes. It's really technical, and they need to have that ability to do credible challenge. So training is a really key piece, and we're working with our clients to offer that type of real complex technical training. The other side, when we talk about culture, if you think about culture, a lot of the challenges we've seen in the dispute side, at least from the CRA reviews of disputes, has been around the way you measure and monitor your business, the performance management structure within disputes or in this area is focused on production and efficiency versus resolution and root cause analysis, meaning instead of saying you're going to process this many disputes in an hour, the goals need to shift to you're going to make sure as an organization that you resolve and identify the root cause of issues, and you're going to get rewarded for solving the bigger problem and not getting through a lot of widgets at one time. So that's the cultural element here. When we talk about detection, we really need to talk about how do you test? How do you get down to that level of testing? And how do you detect? What happens when you do detect? Do you have predefined scenarios? So you send out your file this month, and it comes back that you're having a lot more errors than you would expect to see. What do? Is it predefined? Is there a way that you bring that back? You start over. You send out a new file. Those things have to be really identified and planned for, because it's going to happen. Unless you're perfect, and we all know. I know I'm not perfect. I get told all the time by my family that I'm not perfect on a regular basis. But we're going to have issues, and we need to have a plan of attack when it happens. So what's a plan of attack? We have defined an 8-stage process. The more automated you are in this process, the less control points you'll need, which in any business and in any process that remains true. But in this one, it remains really, really true. I'm not going to spend a lot of time on this because Andrew Edelson is going to take us through this in great detail. But we've defined an 8-stage process, and our goal is to put automation points and tools within most of the processes that you can control for that's on your side. This way you have tools, you have the information, you can act quickly without a lot of labor. Because right now it takes a lot of labor in order to make sure you are perfect in this area. So correction, I assume everyone knows this one really well. It's probably the most noted area is, the biggest piece on correction that we've seen, and especially with the studies from the FTC, is how do you know if the issues are fully resolved? So you go through the dispute process, you take it all the way through the cycle, and you send a letter out to a customer afterwards. How do you know? Did you go back and you check to make sure it was resolved at all the different agencies, all the different points where there was a process? Is there a follow-up piece of that? The other side of it is, how does a customer know it's been resolved? This is really scary for a lot of people. Credit bureau and credit reporting affects their employment, their insurance, the cost of their loans. This is high impact. They don't have awareness of what we're doing. Now, the interesting thing when we do disputes reviews, we find there's so much great work being done inside organizations to resolve disputes. I mean, intensive amount of work. People really being advocates for customers. It doesn't actually, the problem is they don't get any credit for this. They have a form letter in, a form letter out. There's no customer interaction in that process. There's no additional investigation likely where they're reaching out to customers. The customer experience has to be revisited here. There's definitely a need to give them the confidence that, hey, we found something, we're fixing it, and it's been fixed. And if you have some questions, here's where you go, and you can access your credit reports this way to check it. That's the critical element and the last piece of the puzzle that we talk about, and that's the customer experience. Education, accurate interaction, and feedback. One thing that we've learned throughout the process of working with customers is if you don't give them a voice and the opportunity to share their concerns, they will voice it elsewhere, whether it's the complaint databases, it's the web, it's the internet. So in this day and age, we can't hope it just goes away. We have to do it right. We have to get that customer experience just right so they feel comfortable, and it actually can turn into a positive where they'll go out and say, hey, I had a problem, such and such lender really did a great job in resolving it, and I'm just so impressed with the way they handled this scenario. It could have been really bad, but they made me feel really good, and I'm going to expand my business. So this is a real opportunity to earn their trust, earn their respect, and grow their business in this area. If they have issues and you're the cause of it, it could turn out differently. So what do we do? Where do we go from here? One of the things we always like to say is, if you haven't looked across your enterprise at credit bureau practices, start there, the risk assessment. Look horizontally how all things are being done, make sure there's consistency, there is controls. And the nice thing when you do this is sometimes you find certain groups are ahead of others. And you find all the resources and tools within your organization, so you're able to bring the resources across your organization without having to build for each area. And that will help you also with number 2, which is to then define your organizational model. I can tell you, this is the toughest piece, is getting agreement and getting commitment to structure a dedicated team. It takes the longest. It should probably be one of the easier things, but to make that work and to get the resources and to stand that team up is hard. So we say start that early. Start those discussions early, define the roles and responsibilities, and move that on. Next one is to develop enterprise policy and procedures. This could be happening as you do your risk assessment. These are things you can do very quickly. Those things are very defined and very, very basic. The other piece is once you've defined your new model, you should understand the infrastructure and technology needs. It's broader than just putting resources there to control or test. They're going to need some tools and they're going to need some infrastructure. And thinking ahead on that area will save you a lot of time, because I know it takes time to get things queued up in IT and other areas, and you want to give yourself some extra runway there. Once you've done 1 through 4, we like to call defining an excellence plan, meaning define a really targeted workstream level detailed plan to push this forward and create visibility. This is such a critical function that unless you have executive support, you have budget, you have resources, this will not succeed. It is a really hard and vast area that you have to cover. Last one is just to staff and train that credit bureau management team. Training is key, but also making sure you have the right people. And I get this question a lot on, well, do you know any credit bureau experts out there? Honestly, there's typically a couple people within each organization that are experts, but there are so many people that have worked with credit bureau attributes, credit risk, their entire careers. And we say take good managers who have good awareness and have good experience in credit risk and credit bureau attributes and scoring, and you can train them into these particular elements. So don't try to find the perfect person with perfect skills. Take people with industry experience. So I'm going to kind of leave it at that. What we'll do is I'll hand it off to Andrew Edelson. He is a senior program manager on our team, and he's a data quality and technology subject matter expert. Once he's done, we'll come back up and have a Q&A time. So save your questions. Please write down some questions, and we hope to answer more.
Thanks, Brian. All right, data quality, everyone's favorite topic. I get very excited about this, actually. But what is data quality? And in essence, the definition is complete and accurate data ready for consumption by the business, or by anybody in general. The 6 steps that the industry typically talks about are the profiling of the data, which is in essence grouping it and counting and getting some checksums associated with, really a signature associated with that data in that file. Then you get to the cleansing step, which is okay, we need to validate that all the data within that is correct, the zip code has 5 digits and all those types of things. Parsing and standardization, going through, really making sure that your systems have been normalized together. If you have certain codes on one system that are different than another, you can conform them together, making it a little bit easier to understand what the data is saying. Matching is pretty much another step to ensure your data is clean, that you don't have duplicates in there. Also match across, so customer matching across multiple different systems, so you can really tell the big picture of what's going on in your organization. Enrichment is something that's coming up new, which is adding things like GPS coordinates for a transaction. Somebody makes a transaction, where did they exactly make that transaction? You can start enhancing the data with that. And then the monitoring is pretty much going back to number 1 and doing that over time and seeing the change of these particular statistics within that file over time. And the reason that this is really important is because, especially in regulatory environments, one little data point being incorrect can throw everything off for that consumer. So it's really critically important to focus on the data quality associated with credit bureau reporting. You can recognize this from one of Ryan's slides earlier. I was going to talk about a couple of these stages here really quickly. Stage 1 is the pre-transmission review of certain file statistics. So that's doing a profile of the Metro 2 file that is about to go out and understanding what's in there. Are there any discrepancies within the file? Any discrepancies across the different fields in that? So for instance, if there's a particular status and there's only certain valid other values that can be in another field, making sure that all the data makes sense based upon the Metro 2 rules. Stage 2 is taking a look quarterly of those files and ensuring that nothing has changed. And also doing a full mapping back to the source system. A lot of times one field might be mismapped and nobody realizes that from the source system, and all of a sudden a change happens and data is incorrect going out the door. Stage 3, this is looking at the actual reporting file, the bits and bytes of that file, and ensuring that all the pieces are in the right place. Sometimes one little change can push everything over by a digit and it's not in the right place, and things can get corrupted when the bureaus actually process that. I think that's an important point, is that sometimes these things don't get rejected by the bureaus. All right, it's a kind of a soft issue, but it can cause a lot of data integrity issues within the reporting system because one of these fields is incorrect. And then stage 5 is the post-transmission confirmation, to take a look at what the bureaus are actually saying they received and the defects and things associated with what they received. So that's it for that. But really what we're talking about with this data quality scanner solutions that we're really talking about in general here is the detection side. So we're trying to help you detect these issues in an automated fashion to help with all the rest of the steps that you need to take in order. So you can use it as potentially a prevention method eventually, but at the moment, really when you first start, it's really a detection tool. So what this particular tool that I'll show you a demo of really quickly here is it allows us to perform the reviews of the Metro 2 file. It also compares all the different rules, and for every account runs over 100 rules within the system to ensure that all of these different intricacies of the file format are being followed appropriately. And we have run this with many clients now, and even with those that have spent a lot of time and money to ensure that every little thing is exactly right, the tool has found some discrepancies in there that they were unaware of. And again, we're not doing a sampling. This is loading the entire file or files that you might have and looking at every single record and providing a report that goes down to the account level that gives you exactly what the issue was for every account. As well as month over month, there are things that, if you're 30 days past due now, you shouldn't, and you have not paid, theoretically the next month it should be 60 days. Well, if it goes to 120 the next month, well, there's something wrong. So this thing will identify as well those types of discrepancies month over month that might get a little out of whack. And we can provide error trending that you'll see in a second here. So this is the dashboard that we've built. Again, it's a fluid thing. It's really a matter of what you want to measure within the system and how you want to display it, but this is the out-of-the-box dashboard that we provide. And I'll zoom in here a little bit, which is, you look on the left there, they're the different segments associated with the Metro 2 format. And within that, we have categorized all sorts of different rules and put a high, medium, low category on each one. What that means is, we're trying to help you with prioritization of the fixes. So you see a lot of highs, you probably should focus on that first. If you see a lot of lows in there, and only lows, then that helps you understand. You don't really have any huge issues, but we should start with the first low. This is a little bit more detail-oriented reporting at the bottom left on that dashboard, which basically breaks it out into these different categories. Showing, you'll see some of the percentages are higher than 100% on this particular report, and that's because this is measuring the number of discrepancies found for those accounts. So there can actually be more than 100% on a lot of these things if you find a lot more discrepancies per account. And this is a guesstimate on potential regulatory dollar impact by looking at the minimum and maximum fines potentially. So don't look at this as a complete accurate assessment of that. It's just giving you a ballpark estimate if you were to get fined on every single one of those found issues, what the minimum and maximum fines potentially would be. And then again, just a heat map to give you an idea of by these different categories, or actually in this case by the segments, the total number of discrepancies found, and try to help you prioritize the fixes. So that's the first page. The next one's a little bit more, this is the detail dashboard, which shows those same categories, gives you count, and as well as that heat map on the right. So there's the different counts by high, medium, low for each one of these categories. If you were to click, I'm not interacting with it right now, but if I were to click on any of these things, you will see a drill down in the bottom right, which shows all the account numbers, the rule that it was violating in essence, and then the values in that particular account record that are causing the problem. Okay, so this portfolio R and terms duration LOC is an invalid combination. So one of those two fields is incorrect, the value in it. And then as well, we have this rule rationale. So if you mouse over it, it'll give you why we think that's a problem. So we're trying to give you as much information within the interface to help ensure that you understand what needs to be done next. So that's the demo of that, but we are building a full suite of products. This is just the Metro 2 scanner. So the next step of this is to take the Bureau reject file and compare it back with the scanner results. So we can say, hey, did we catch everything that they're rejecting, number one? And number two, ensure that we see that things are getting fixed over time. So if we saw a problem, all of a sudden it's not showing up on the file anymore, we can tell that, yes, we have resolved it end to end. As well, reconciliation with the Bureau file with the source system. So this is to add another vector into the system. So we talked about mapping and checking that against the source system. If we do a separate mapping to your source system and compare that with the Metro 2 values that are in the file, we can also ensure that there's nothing wrong associated with the mapping and nothing changed on that mapping. And again, we're going to be adding additional file types and all sorts of different things to this to ensure that we build this central compliance mart. So all of the data quality things associated with regulatory things or anything that you'd like to add in there to ensure that you're seeing the big picture can be included in this tool. So, so I will be available all day in our, I think it's the courtesy room if you'd like to see the tool in action. But I think that is it. So we'll have our Q&A. Okay.
I always have to watch myself. I have a history of falling off stages at CBA Live, so I know there's a clause in my agreement to stay on a stage. Okay, we're just going to open it up for questions. Kurt, come on over. Don't hide. You won't have to give an official legal opinion today. So any questions out there? We got one right up here.
Mentioned centralization, the potential 15 to 30 resources. I was just curious, based on your experience, where have you seen this reside in the financial institution?
That's a very good question. That's the burning question we always get is, who should own this? Who should own this? Where should it reside? And how many and what's the right level? So great question. This is an interesting area because it's one of those areas where you see credit risk and operational risk coming together. So the right answer is it could be your chief credit risk officer, but it should be someone at that level inside your organization. It could be your chief risk officer, or it could be a COO who has ownership of business line risk. So depending on your org model and your CMS structure, either of those are relevant places, but it is a risk function that's merging both credit and operational risk. Very good question. Thank you. We got one in the back there.
Yeah, what do you think is the greatest risk today in preparation of the regulators when reviewing credit bureaus?
Greatest risk.
Can you take that?
Yeah.
All right. I think really it's a matter of ensuring that you have appropriate evidence that you are baking these data quality controls into your policies and procedures, as well as that inventory that they were talking about is fully fleshed out, and that from a end-to-end cycle perspective, and that all the applicable regulations are being followed from a usage perspective, especially, and a disputes perspective. Usage is tricky because a lot of times they do get loaded, and people misuse them unintentionally. So it's really important to focus on usage and disputes.
We have another question. George?
Yeah, you made lots of mention about consumer credit bureaus, but there's many of us in the room that are small business experts. So what would you say about the small business repositories? Where do you see that heading, and how do you think these regulations will apply?
Rather than establishing a separate enterprise function, that should be part of an enterprise function, whether it's consumer, small business, and if you have any commercial reporting agencies or relationships, you might want to keep it there. The discipline from a compliance control perspective is the same, and you're going to need to invest some money and resources to it. You might as well bring it all together.
And actually, before we move on, I want to hit that question just a little bit further too, in that I'd even think about that in a couple categories, because small business, we use within small business data that we all know as consumer, that we're already talking about. So I think that clearly is something that we need to be thinking about within our small business lines. But also, as we try to read the tea leaves going forward, one of the challenges in small business, and I know I'm preaching to the choir for those that are already dealing with a lot of this, is understanding what aspects of our small business portfolio have some level of consumer regulations applied. So when we look at this, even data that is traditionally thought of as small business data, I think is a matter of time until it becomes subject to a lot of these same things. We want to get ahead of that curve. And I know, for example, to throw it out there, SBFE, which is obviously one of the major data exchanges of small business data, clearly something you don't historically think of as a consumer asset, they're already being very proactive to focus on drawing all the lessons out of the consumer side and say, how do we embed that in our rules and processes to make sure that when inevitably the attention comes, we're already in good shape.
Thank you, Matt. Another question.
Hi, I was just wondering, from a rating standpoint, I saw sort of the high risk, the medium, and the low, I think if I recall that correctly. Could you talk a little bit about kind of how you derive that? And then are you suggesting that when it's low, from a lender perspective, you can be sort of less worried about that? I'm just curious if you thought.
You're talking about on the tool itself, the high, medium, low. Yeah, the high, medium, low there's about 100 rules in the system. Each rule is assigned a category based upon some level of understanding of how big that problem would be, but I would not say that if it's categorized as a low, you can just ignore it. It's really to help if you have lots of highs to start with those, okay? Because they'll get you in a lot more trouble. So the low, may be a misnomer, but really it's still a high risk.
It's not optional.
Yes, it's not. Low is not optional. And that's also something, if your company uses values other than high, medium, low on these types of categories, we can accommodate that kind of thing as well and use your scale.
Go ahead. Follow up. Hold up. One sec. Let's get you to the mic.
As far as the rating, is it based on potential customer harm, size of population in terms of how many accounts you had? Is it based on a regulatory perspective from CFPB perspective in terms of what the hot buttons are?
I think
what are
it's
kind of the
based
triggers of high,
upon the severity of the impact of the issue. So, for instance, there's some where it's comparing a couple dates. Okay, and if those dates aren't exactly the same, it might be a problem, it might not. So there's a little soft side on that one, but there's other ones where it's an absolutely invalid combination that will cause a bureau either reject or they'll load a partial record and then all of a sudden it's completely corrupt record and not correct. So.
And to answer one part of that question directly, it's the prioritizations at the rule level. It doesn't take into account the volume. So you may have one that was where it says, hey, this is a real high priority issue, but fortunately it's only affecting 7 accounts. This one's a medium, but it's hitting 6 million accounts. We have this real systemic issue here we need to fix. So
yes.
Yeah. Another question? I was waiting to see if you would opine. Thank you.
This is a question. The dashboard and some of the other concepts you've talked about sound a lot like sort of Six Sigma and other kinds of industrial process control types of algorithms where the basic principle is what gets measured gets managed.
Yeah.
The benefits of quality control often include cost savings. So if you are good at spotting, preventing errors, then you don't have to invest in back-end correction, dispute management, and so forth. do you have statistics or do you have examples of actual savings that institutions have been able to reap by implementing this kind of data quality program?
I think, to answer your question, really good point. We just started to roll these out at the start of this year. So we'll be looking to track the cost savings, the benefit, the impact. What we know right now is when we run the files, we're seeing an incremental lift to whatever they were using before, either internally or through external pieces. But the biggest impact of using these types of data quality tools is you can do that anytime you want. Meaning a lot of times in the past, it was a very manual function, happened maybe once or twice a year, or came from one of the reporting agencies. This is something you can use, and you could do things like when you need to do regression testing on a new system element or a system enhancement, you can use the tool to do that very quickly, or tools to do that. So good point, and we are going to be tracking that value add, because we do think, and the reason why we put the monetary values in there is we want our clients to be able to justify the expense that they're going to have to put into this. And these are ways to do that very easily and quickly. But thank you.
So what would you recommend regarding the differentiations between the bureaus? And I give you a few examples, like their definition of what they consider hard versus soft, what happens with the data when it goes into their black box and comes out and looks different than what you thought. So I'm just curious to hear your guys' perspective on that.
Yeah, very good point. We've had a lot of discussions with clients that they believe they're in compliance with Metro 2, but the bureaus themselves have a little bit different interpretations on different areas. And I recommend we as an industry take the lead and work directly with the regulators, the gentleman sitting next to you, as well as the reporting agencies, and all get together and talk about Metro 2 is Metro 2, plain and simple. And we need to know if we send you a Metro 2 that is the way it's going to be, and you're going to receive it and going to do exactly what Bureau A, B, C, or Bureau Z now is going to do with it. So we agree with you. It is a problem.
And it's also part of why when you look at the roadmap that Andrew described, I think one of the things that we'll be rolling out pretty soon is a tool to help in an automated way compare the outputs back from the bureaus. So great, we fed it to all the bureaus, and even if we were perfect putting it out, now what are the bureaus saying with the data we gave them, and can we match back and get a perfect reconciliation? Because until those issues are fully resolved that you described, that's a really important step.
Critical topic. Next, another question? Oh, Michael.
So this may be a little bit of a tougher question, I guess, but I'm just curious.
Sure.
Just being curious, I guess. Do you have a sense in working with the reporting agencies or even some of the regulatory folks that you mentioned as to whether there will be future rules, if you will, around what has to be reported versus what doesn't have to be reported? Because I think there's obviously a lot of variability there between what is and isn't. And so do you just have any sense as to whether anything's coming down the line that defines that a little bit more in a structured manner?
I'm not aware of specific activities on that, but I can see that evolving as more and more people are engaged at a much more detailed level. So when we define policies and procedures, we define what exactly you should be reporting, what events, what scenarios you should be reporting. So we feel that it's a critical item. I'm not sure where the rest of the industry stands or where they are in that path, but really good point. Another one.
And I think that evolution, when we mentioned the small business side earlier, right? Once you start to pull small business into this, that even gets trickier, right? Because when you think about where you've got a small business loan but personal guarantees, we don't tend to, most of the time across the industry, we don't report any of that usage of consumer data for small business, perhaps until we are now trying to collect their 90 days past due and we're acting upon it. And so there's a lot to get sorted out. And I think it's one of those where at this point, there isn't a guidance, and we're not personally aware of any specific guidance coming on how that's going to have to be. But that lack of guidance doesn't take away the duty we all have to go through the policies and procedures internally and go, let's be thoughtful about what in our best judgment feels like the way to be, and then let's execute against that.
Good point. Question? Any other questions? Well, okay. Then we'll move to the fun part. You all stayed for the whole time. We're going to pick for the iPad mini and the Kindle Fire, but we'll just let everyone know that we will be in the Flagler room. Andrew will be there all day today. And if you want to get a demo of this solution, or if you just want to come and talk about it, feel free just to snag us before you leave, and we'll schedule time, or just come to the room. We'll just have Andrew stay there. He's not allowed to leave at this point. He's going to be held hostage to that room.
One final note that I'll give, just kind of parting, and this comes back to a company philosophy. On this topic or any other, please don't hesitate to reach out to us if you'd like to just have a discussion. We've built this company very largely on a belief of putting out the good karma to good people, right? Do the right thing. We're always happy to take an hour or two of our time just to do the best we know how to give you the guidance from what we've learned. And I love when folks take us up on that, right? I mean, candidly honest, we're not necessarily the best people at meeting new folks at a cocktail party, but we're pretty good at helping people sort through their issues. No, really.
Thank you all for spending your breakfast with us. I hope you've learned something, and I wish you a great conference. Thank you.
Thank you.